Trillions. That's the staggering market capitalization NVDA has commanded, reshaping investment portfolios across the globe. Every major fund manager and retail investor is now scrutinizing its trajectory, desperate to understand whether this unparalleled growth can genuinely continue or if the AI boom has peaked. NVDA's meteoric rise has been fueled by its cutting-edge AI technology, including the highly successful DALE and H100 models, which have revolutionized the way businesses and individuals interact with AI. With a market value of over $1.3 trillion, NVDA has become the largest publicly traded company in the world, surpassing tech giants like Apple and Microsoft. The company's impressive growth has also led to a surge in its stock price, with shares increasing by over 500% in the past year alone, making it one of the best-performing stocks in the S&P 500. NVDA isn't just a chip maker, it's the foundational architect of the artificial intelligence revolution. Its GPUs power the vast data centers of tech giants like Microsoft, Google, and Amazon Web Services, driving the computational horsepower needed for generative AI models. This dominance isn't accidental. It's the result of decades of strategic investment in graphics processing and a visionary pivot towards accelerated computing. What's wild about this is the sheer indispensability NVDA has engineered for itself in a rapidly evolving tech landscape. They effectively built the picks and shovels for the AI gold rush, cornering the market before many even understood its full potential. For instance, NVDA's A100 GPU has been adopted by over 200 companies, including NVIDIA's own data centers and those of major cloud providers, and has been used to train some of the largest AI models to date, such as the 220B parameter Palm 3 model at Meta. The A100's 312 GB/s memory bandwidth and 19.5 teraflop performance make it an ideal choice for applications where massive amounts of data need to be processed quickly and efficiently. Moreover, the A100's popularity has been fueled by the growing adoption of AI in industries like healthcare, finance, and education, where large-scale data processing and analysis are critical. Demand for NVDA's H100 and upcoming Blackwell chips remains insatiable, fueled by a global AI arms race that shows no signs of slowing down. Reports from industry analysts, echoing sentiment from major players, consistently highlight lead times extending well into the next year for high-end AI accelerators. This isn't just hype. It's reflected in the capital expenditure announcements from hyperscalers, funneling billions into expanding their AI infrastructure. Bloomberg Intelligence has frequently pointed to these sustained CapEx cycles as a key indicator of continued NVDA strength. The sheer volume of transactions in the enterprise AI space paints a clear picture. Computational power is the new oil, and NVDA controls the refineries. In particular, Microsoft's $10 billion investment in OpenAI is a testament to the growing importance of AI in the cloud, with NVDA's H100 chips set to play a central role in this partnership. Furthermore, Google Cloud's recent $5.6 billion acquisition of Anthropic, a leading AI startup, underscores the significant investments being made in AI research and development, where NVDA's Blackwell chips are poised to make a major impact. Additionally, Amazon Web Services, AWS, has announced plans to increase its AI spend by 50% in the coming year, with NVDA's chips at the heart of this expansion. As the major cloud players continue to compete for dominance in the AI market, NVDA's position as a leading supplier of AI accelerators appears increasingly secure. Here's what nobody mentions enough. NVDA's true moat isn't just its hardware, it's CUDA, their proprietary software platform. This ecosystem effectively locks developers into their architecture, making it incredibly difficult and expensive for companies to switch to competing hardware. Think of it like Apple's iOS for AI, a tightly integrated, user-friendly environment that fosters loyalty and innovation within its walled garden. This isn't merely about selling chips. It's about selling an entire, deeply embedded development stack that has become the industry standard. It's a strategic masterstroke that underpins their long-term competitive advantage far beyond raw silicon performance. According to a report by Goldman Sachs, the adoption of CUDA has led to a significant increase in AI-related workloads on NVIDIA hardware, with a staggering 70% of the world's top 10 AI research institutions relying on NVIDIA GPUs. The likes of Google, Microsoft, and Amazon have all invested heavily in NVIDIA's AI infrastructure, with Google alone using NVIDIA's T4 GPUs to power its cloud-based AI services. Furthermore, NVIDIA's software platform has been instrumental in driving the growth of the autonomous vehicle market, with companies like Waymo and Tesla relying on NVIDIA's DriveWorks platform to develop and deploy their self-driving systems. By controlling the development stack, NVIDIA has effectively become the gatekeeper for AI innovation, allowing them to dictate the terms of the industry and reap the rewards of their strategic investment in CUDA. Beyond data centers, NVDA is aggressively diversifying into nascent high-growth markets that promise future revenue streams. Their Drive platform is making significant inroads into autonomous vehicles, with partnerships across the automotive industry signaling a pivotal shift towards AI-driven mobility. Furthermore, their Omniverse platform is poised to capitalize on industrial digitalization and the metaverse, creating digital twins for factories and urban planning. Gartner Insights consistently highlight these emerging verticals as crucial battlegrounds for tech dominance. This isn't just about riding the current wave. It's about proactively shaping the next generation of computational needs, securing future growth avenues. For instance, NVIDIA's partnership with Volkswagen aims to develop Level 4 autonomous vehicles by 2025, leveraging their Drive at Land platform for advanced AI and computer vision capabilities. Additionally, their Omniverse platform has been adopted by major companies such as Siemens, Bosch, and Dassault Systems for industrial digitalization and metaverse applications, further solidifying their position in these emerging markets. According to a report by Markets and Markets, the industrial digitalization market is expected to reach $1.3 trillion by 2027, with NVIDIA poised to capture a significant share. With their innovative platforms and strategic partnerships, NVIDIA is well-positioned to capture the vast growth opportunities in these emerging markets. Everyone focuses on NVIDIA's unparalleled market share, but a critical twist lies in the looming specter of custom AI chips. Hyperscalers like Google with their TPUs and Amazon with their Trainium chips are investing heavily in designing their own silicon, aiming to reduce reliance on third-party providers. This isn't an immediate threat, but it signals a long-term strategic shift towards vertical integration that could eventually cap NVDA's growth in certain segments. While NVDA's lead remains formidable, this internal chip development strategy by its biggest customers represents a potential ceiling on future market expansion, forcing NVDA to innovate even faster. For instance, Google's tensor processing units, TPUs, have already achieved impressive performance gains in deep learning applications, with some reports suggesting a 300% increase in AI model training times. Amazon's Trainium chips, on the other hand, are designed to accelerate machine learning workloads with a claimed 20x increase in performance over traditional CPUs. As these hyperscalers continue to push the boundaries of custom AI chip development, NVDA will need to keep pace to maintain its market dominance. The sheer capital expenditure required to maintain NVDA's technological lead is a surprising truth often overlooked. Developing next-generation architectures like Blackwell, maintaining intricate relationships with foundry partners like TSMC, and investing billions in R&D is a continuous, high-stakes game. This isn't a business for the faint of heart. It demands relentless innovation and massive financial commitments. Any slowdown in R&D or a misstep in chip design could open doors for competitors like AMD, who are aggressively pursuing market share. The pressure to stay ahead is immense, demanding flawless execution year after year. According to recent reports, NVDA's R&D expenses have consistently accounted for over 25% of its total revenue, exceeding $20 billion in 2022 alone. This investment has driven breakthroughs in areas such as AI and machine learning, where the company's GPUs have become the industry standard. Despite these successes, the landscape is constantly shifting, with emerging players like Intel's Nirvana and Google's TPUs challenging NVDA's dominance. Furthermore, the company's reliance on TSMC for manufacturing has become increasingly critical, with the foundry's 3nm process node being a key differentiator in the industry. The stakes are high, with any misstep potentially allowing competitors to close the gap and gain significant market share. Long-term data suggests the global demand for AI processing power is still in its infancy. From personalized medicine to advanced climate modeling, the applications of AI are expanding exponentially, each requiring more sophisticated and efficient computation. McKinsey reports frequently underscore the multi-trillion-dollar economic impact of AI, indicating a sustained need for foundational infrastructure. This isn't a fleeting trend. It's a paradigm shift comparable to the Internet's early days. As more industries adopt AI, the underlying demand for NVDA's core offerings will only intensify, creating a sustained tailwind for revenue growth. For instance, NVIDIA's data center business, which accounts for a significant portion of its revenue, has seen a substantial increase in demand from cloud computing providers like Amazon Web Services and Microsoft Azure, who rely on NVIDIA's GPUs for their AI and machine learning workloads. According to a report by Markets and Markets, the global data center GPU market is expected to reach $12.6 billion by 2027, growing at a CAGR of 22.4%. Additionally, NVIDIA's partnerships with leading tech companies like Google, Facebook, and Baidu have further solidified its position in the AI infrastructure market. Furthermore, the company's recent acquisition of ARM Holdings, a leading provider of processor IP, has expanded its capabilities in the AI processor space, making it an even more formidable player in the market. The valuation debate surrounding NVDA is a perennial fact that constantly surfaces. Critics often point to its high multiples, arguing the stock is priced for perfection. However, what's often missed is that NVDA isn't merely valued on current earnings. It's valued on its strategic positioning as the linchpin of the future AI economy. Wall Street analysts consistently factor in its ecosystem lock-in, its unparalleled R&D pipeline, and its diversification into new markets. The market is effectively pricing in NVDA's ability to capture a significant portion of the projected multi-trillion-dollar AI market, making traditional valuation metrics less indicative. As the AI landscape continues to evolve, NVDA's leadership in AI hardware and software is becoming increasingly crucial, driving the company's growth trajectory. For instance, its data center business has seen a significant surge, with revenue increasing by 61% year-over-year in Q4 2022. Moreover, the company's partnership with Microsoft to integrate its AI technology into Azure, the latter's cloud computing platform, is expected to further drive growth. According to a report by Goldman Sachs, the global AI market is projected to reach $190 billion by 2025, with NVDA poised to capture a substantial share. The ultimate upside for NVDA doesn't just hinge on selling more chips. It rests on its ability to evolve from a hardware company to an AI platform and services powerhouse. What most investors miss is that a significant portion of future growth could come from software subscriptions, cloud services, and licensing its AI models and tools. If NVDA successfully transitions to a higher margin recurring revenue model, leveraging its CUDA ecosystem even further, the upside could truly be staggering, defying conventional hardware valuation limits. This shift, more than mere chip sales, will define its next chapter. With its recent acquisition of DeepMap, a leading-edge mapping startup, NVDA is poised to disrupt the autonomous driving industry, further expanding its reach into AI-powered applications. In fact, according to a report by Goldman Sachs, NVDA's software segment is expected to grow at a CAGR of 30% over the next 5 years, driven by its growing presence in the cloud and AI markets. Furthermore, NVDA's CUDA ecosystem has already seen significant adoption, with over 100,000 developers using its platform to build AI and machine learning models, demonstrating its potential for long-term growth. Don't miss out on deeper insights like these. Subscribe to our channel for more exclusive analysis. Wall Street's top brass remains sharply divided on NVDA's future. Analysts at major firms like Goldman Sachs and Morgan Stanley are adjusting their price targets, some pushing further skyward, citing sustained demand in enterprise AI deployments. Others, often from boutique research houses, express caution, pointing to potential market saturation in certain segments. What's clear is the consensus on its current dominance, but the divergence lies in predicting its long-term staying power. Bloomberg polls regularly reflect this tug-of-war, with bullish calls often outweighing the more conservative outlooks for the immediate horizon. It's a market where every whisper from a key analyst moves the needle, reflecting the immense investor interest. For instance, a recent report by Deutsche Bank highlighted the growing importance of AI in the manufacturing sector, citing NVIDIA's partnership with Siemens to develop more efficient production lines. Meanwhile, a survey by Bank of America found that 70% of respondents believed AI would become a key driver of growth for the company in the next 2 years. Furthermore, the growing adoption of NVIDIA's Omniverse platform, which enables real-time collaboration and simulation, is expected to contribute significantly to its revenue growth in the near term. These developments have led some analysts to raise their price targets, with a recent estimate from Cowen & Co. predicting a 30% increase in shares over the next 12 months. Global markets are feeling the ripples of NVDA's ascent, far beyond just stock prices. Nations from Europe to Asia are now strategically investing in domestic chip fabrication and AI research, spurred by a recognition of semiconductor centrality. European Union initiatives, for instance, are channeling billions into local chip production, a direct response to supply chain vulnerabilities highlighted by the AI boom. Japan and South Korea are similarly bolstering their tech sectors, aiming to capture a piece of the burgeoning AI hardware market. This isn't just about economic competition, it's a geopolitical play, with countries vying for technological sovereignty in the AI era. For instance, the European Union's Horizon Europe program has allocated 10.5 billion euros towards cutting-edge semiconductor research and development, while the Japanese government has announced plans to invest $2 trillion in its new growth strategy to bolster its domestic chip production capabilities. South Korea's National Research Foundation has also committed to investing $2.5 trillion in AI and semiconductor research over the next 5 years. Furthermore, China's Made in China 2025 initiative aims to increase the country's domestic chip production to 40% of its total semiconductor needs by 2025, underscoring the global competition for AI-related technological leadership.